And I think the commercial banks are trapped and scared, and they understand this. They understand that, like, if they try to cover on COMEX, it just pushes up the price on the LBMA. Every dollar increase in the price of silver is a $4 to $6 billion loss on those banks' balance sheets. At what point do they continue to short so that more people say, okay, we'll stand for delivery at these stupid prices? And then when do we get that ultimate default, which then pushes the price to the moon as everyone tries to cover, or it just blows up the system? So ultimately, we probably progress towards a more realistic ratio between price and mine supply, or in the ground.
The manipulation of silver prices has become a highly contentious and widely debated topic in the precious metals sector. It is well known that the market for precious metals, particularly silver, has been subject to significant interference by major financial institutions, commonly referred to as bullion banks. Prominent players, such as J.P. Morgan, Goldman Sachs, and HSBC, have faced substantial fines in recent years for their role in manipulating precious metals markets. Despite these penalties, silver has notably struggled to reach new price highs in over a decade. Historically, silver has moved in tandem with gold, typically following its rise and often outperforming it during bull markets. While gold has set new price records multiple times this year, silver has lagged behind, failing to capitalize on the same momentum. According to Andy Schectman, the president of Miles Franklin Precious Metals, the situation with silver in 2024 is far more complex than most people understand. In a recent interview with Stacking Surfer, Andy highlights a critical but often overlooked anomaly: the gold-silver ratio. This ratio is hovering near historic lows and is significantly detached from what Andy calls God's ratio. He believes this is an alarming indicator, suggesting a major market shift is imminent. Andy argues that those who have invested in silver will benefit significantly when this correction occurs. He also emphasizes that the manipulation of silver prices runs much deeper than most investors realize, hinting at a broader, systemic issue that could be on the verge of unraveling. Andy warns that this unraveling has started already, with countries like China, Russia, India, and Saudi Arabia heavily investing in the gray metal, using Western price suppression to their advantage. However, Andy believes when the unraveling starts, the bullion banks will suffer heavy losses as these countries will demand immediate price revaluation for both gold and silver and force the end of Western suppression. As we present clips from the interview, please like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
When you talk about a price ratio at 85 to 1 and a mining ratio at 7 to 1, that in and of itself is bad enough, right? I mean, that in and of itself says, well, something's really wrong, and maybe it doesn't have to get 1 to 1 with its mining ratio, but it's got to get a whole hell of a lot closer than 11 times away from it. But when you put it into the context, for example, of a 1.1 billion ounce deficit versus supply versus demand over the last 6 years, another 265 million ounce deficit this year, and doesn't even include the military applications that mysteriously have been omitted from the Silver Institute's numbers. When you realize that the M2 money supply is up 14 times since 1980 and silver is selling at a 40% discount to its 1980 high, when you realize that there are 2.9 billion ounces of silver traded on the LBMA every day, which is 3.5 times annual global mine supply. When you realize that these bullion banks that are as stupid as a mud wall are short to the tune of 4 to 6 billion ounces that supposedly are available for delivery, those contracts that they sell on the LBMA over-the-counter market, which isn't an exchange where there's some entity that can come in and save the day. This is a one-to-one deal, and all the people who have the other side of that trade think that they can stand for delivery. Doesn't mean they will, but they could. And if they do, that means there's 4 to 6 billion ounces of silver that could actually stand. And the reason that it's not for sure how many there is that it's a much more opaque market. It's it's a one-to-one market instead of an exchange like the COMEX. And so it's a lot more less transparent, if you will, than the COMEX is. But all of these people could stand for delivery, and yet there's only 300 million ounces available that is not already accounted for at the LBMA. What if everyone stands for delivery? And so when you talk about this scenario where we see continual deficits, we see massive naked shorting, and we see the smart entities in the global south draining the exchanges, where 8.1% of the float, the available 300 million ounces, was delivered in August. Where is it going to? Who's buying it? And so we are entering a period of time where it's accelerating, and the countries around the globe that are buying silver understand that. This is why I made such a big deal about China flying around Latin America buying unrefined silver in the form of bars and and concentrate, which is the byproduct sludge, and the unrefined silver bars, the doré bars that are crudely refined by the miners who then send it to the refiners. Well, China says, I'll just pay you double and take it right off your hand, and I'll ship it to China and refine it myself. Well, they're already the largest or second largest producer of silver in the world. And if I had to bet, they're probably the largest. They just don't tell us how much they mine. And so we are entering a period of time where I think price discovery will ultimately be forced upon the world through some form of a issue where a failed delivery on the LBMA, which could, catalyze a massive spike in the price of silver, or something like COMEX, which is a rules-based exchange where, it's written into the rules that if in the interest of the exchange, we can basically say you can't get delivery and we're just going to cash settle you. Well, that's a default. So could that happen? Yeah, why not? We're seeing all of these things progress and accelerate. And we're seeing countries accelerate their acquisition of silver. We see Russia being the first nation to openly admit it will be part of their.
Technical analysis reveals that silver has formed a massive cup and handle formation spanning over 44 years since 1980. The cup and handle is a bullish continuation pattern that signals a potential breakout to the upside, and when applied to long-term charts like silver's multi-decade performance, it can indicate the potential for a significant upward price movement. The fact that this cup and handle formation has developed over such a long period, 44 years, makes it particularly significant. Analysts are calling this massive formation the granddaddy of cup and handle formations, as it easily dwarfs any other pattern they've noticed in recent history. A pattern of this magnitude could suggest a powerful breakout if the technical indicators align with macroeconomic factors such as inflation, interest rates, monetary policy, or demand for safe haven assets. Many factors, such as rising inflationary pressures, potential currency devaluation, geopolitical uncertainty, and central bank monetary policies, are creating conditions that could fuel the demand for precious metals like silver. If these economic conditions persist, the breakout from this long-term pattern could be amplified by both technical traders and investors seeking safe haven assets.
Well, look at the cup and handle in silver, man. The 40-year cup and handle in silver is unlike anything I've ever seen.
Yep.
I mean, look at the cup and handle formation in silver. If you pull up a chart, it's enormous, and it's about 40 years long, which means it's very mature. And for those people who don't know technical analysis, it's one of the most bullish technical indicators of all time. So you see the cup and handle formation in both gold and silver, maybe even stronger in silver. And again, the only reason these countries aren't bitching is because they're the ones buying it. They're the ones knowing they've got the West over a barrel. You do not need to send, cruise missiles into the U.S. to fight the U.S. to beat them. You just need to beat them at their own game in a lawful manner, and that's stand for delivery in all the world's commodities. And that's what they're doing. And they're beating us because of our own stupidity, which is suppressing a market that no one ever stood for delivery. They are now. And that's how you win a game that is transitioning from opaque debt promises to commodity-backed ecosystem, which we certainly are, it seems like. So that'll all change when there is a non-delivery event, or there is a cash settlement event, or something that triggers the rest of the world to understand that price discovery on the West is a joke. And you look, for example, look at the difference between COMEX, which is rehypothecated 15, 16, 1700%, meaning 17 people all think they own the same, all have a contract and think they have claim to it. But if one person says, give it to me and gets it, what happens to the other 16? Well, that's cash settled. But you look at the Shanghai Metals Exchange as an example. In order to trade a bar on the Shanghai Metals Exchange, you have to first buy a bar from one of the 6 or 7 pre-approved refineries who will give you that bar, and then they laser inscribe a serial number on it that is associated with the contract. And that inspires confidence and credibility. We don't have anything like that on COMEX. It's just completely, totally sold over and over and over and over and over again because most of the people don't stand for delivery. So we'll cash settle if we're Bank of America or JP Morgan or whatever, and no one will ever know until people say, give it to me. And that's what happened to Bernie Madoff. Same thing. It's a Ponzi scheme until it's a business until it is discovered as a Ponzi scheme. And, you know, me screaming and others like me screaming about this only does so good because, you know, maybe the people who are standing for delivery understand it, but if really the people in this country understood it, it represents an opportunity of a generation to buy an asset that is being accumulated at levels people I don't think quite comprehend because it's being masked by the inability to get real price discovery by this rehypothecation and this naked shorting in London that is for a very long time obliterated price discovery and the real value found inherently in this stuff. It's not lost on India or China or Russia or Saudi Arabia or the other countries who are using it against us, but it really truly is, in my book, in my mind, an opportunity of a generation, one that you will not find very often. Look at the fundamentals, price, demand, supply, lack of supply, errors in reporting of supply, rehypothecation, massive naked shorting, all of this stuff, and accumulation by half the world using that against us. This is a rare opportunity. Either you take it or you think I'm talking my book. That's up to you. But I'll just simply tell you, I've never seen anything like it. I think it's a bet that I would be willing to take if you have a time horizon that's not too long down the road, but you know, markets can stay irrational longer than we can stay solvent. That's true. In the end, mathematics will win this. This is all about math. It's all about logic. It's all about economics. And in the end, that will all prevail. Don't know how it plays out or what triggers it.
For prominent bullion dealers and legendary investors like Andy Schectman, Jim Rogers, and Rick Rule, silver is the opportunity of the century due to several key factors. 1. The supply of silver has been constrained, while industrial demand, especially in sectors like renewable energy, electronics, and electric vehicles, has been increasing. Silver is essential in technologies like solar panels and electronics due to its high conductivity. As green energy and digitalization continue to grow, the demand for silver is expected to skyrocket, further straining supply. 2. The gold-silver ratio shows that silver has been undervalued relative to gold. This ratio has fluctuated widely, but is currently near historic highs, which many investors see as an anomaly. Some experts predict a correction in this ratio, where silver could outpace gold in price appreciation. Silver, like gold, is a precious metal that acts as a hedge against inflation and currency debasement. As fiat currencies become more volatile due to rising global debt and money printing, silver's role as a store of value becomes more critical. Over time, these monetary pressures are expected to enhance silver's appeal as a safe haven asset. Additionally, silver is being consumed in industrial applications faster than it is being mined, leading to concerns over depleting above-ground stocks. Some analysts predict that the long-term scarcity of silver could result in sharp price increases as reserves are drawn down and new mining projects fail to keep up with demand. Lastly, many analysts, including David Morgan and Andy Schectman, have discussed the possibility of a mania phase, or Great Silver Crisis, where silver prices could dramatically increase due to the culmination of supply deficits, industrial demand, and market manipulation coming to an end. This generational shift could create a significant upside for long-term silver holders. These factors combined suggest that silver is positioned to deliver outsized returns over the long term, making it a valuable generational play for investors with a long-time horizon. What are your thoughts on the real value of gold and silver? Do you agree with Andy's predictions about the end of silver price manipulation? Let us know in the comments below. For more content like this, don't forget to subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for tuning in.